Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market update for the last week of May 2017. As far as the grains are concerned, we continue to see fairly quiet markets. Late twist in the market this week on Friday, with soybeans down, continued down after some pressure on Thursday, making new recent lows, and down again here on Friday. At the same time, the feed grains, corn and the wheat, have seen some stability, I should say. And beans actually hitting the lowest level in 13 months. Just a little bit on that in a second. For the week, July corn's up 1 cent. July wheat is up 2 cents. And July soybeans are down 27 cents. So the catalyst, or most of the focus on the pressure in the bean market, is pork crush margins in China. Poorest crush margins we've seen in several months, along with many countries being on holiday with the long weekend and so on. China will still be on holiday on Monday and Tuesday of next week, also keep in mind. So that seems to be the pressure in the bean complex. Some analysts will say it's about time when you look at the world fundamentals of soybeans, and also where we've been from a ratio standpoint against wheat, against corn over the last several months. Now, having said all that, seasonally, the bean market tends to, from the last few days of last few days of May through about June the 10th, the market has been up 13 of the last 15 years during that brief 10-day, 2-week period. So watch that. Bean spreads continue to be very flat. Not a lot of carry in the bean market, but they are showing some widening with this pressure in the market. Corn, gravitational pull towards 370 continues to be the talking point. We're above that today. Very quiet, not a lot of news. Market continues to focus on planting delays in some parts of the Midwest, and/or just slow growth because of some cooler temperatures. See how weather plays out in that category going forward. We continue to talk in this office a lot about basis risk, old crop corn going into the summer months, because the vast amount of old crop corn at some point feels like needs to move. Not to say the basis is going to fall apart, but the risk of basis going down versus higher over the next 60 days is very real. Spreads continue to be very quiet on the corn, different than the beans. We have very wide carries in the corn market. We're about 30 days away from delivery against a July contract, and with current scenarios, you would look for fairly good deliveries on the corn, possibly the soybeans. Wheat, if anything, potentially shows a slight bit of leadership in this market. Big rains are expected in parts of the southern plains over the next week, and that could lead to some slowdown in harvest or some quality issues going forward. So that's the biggest hurdle to watch in the wheat market going forward. Cattle on feed reports this afternoon, this morning at 11 o'clock. On feed came at 102. The trade was looking for 101, so we got more cattle on feed. Placements 111%. Trade was looking for somewhere around 107. So placements are up, and marketing is also higher at 102.7. Trade was looking for something a little under 102. We did see some pretty good pressure on the cattle market late in the trade based off of that report. Cash market continues to be a very strong premium over futures, which should be a stability to the front end of the cattle market, it seems, from a cash standpoint. Next week, as we focus, obviously no markets on Monday because of Memorial Day. Next week, as far as the grains are concerned, we'll get a crop condition and planting progress update on Tuesday afternoon. People in the eastern Corn Belt are going to focus on that a lot based on what do things look like in parts of Illinois, Indiana, Ohio, etc. And obviously weather will be a key factor next week also as we go through the growing season. June 1st is next Thursday. It always seems to be a Memorial Day to that time, a kickoff point into the summer growing season. Stock market this week made new highs. Energy market continues to be fairly flat. So even considering the dollar seeing some pressure here over the last few weeks and reaching its lowest level in the last 6 months, the macro side of the market, i.e. strong dollar, weak commodities, weaker dollar, stronger commodities, at least at the time, is not holding true. So the macros have been fairly quiet from an investment standpoint. The stocks seem to be where the most emphasis is on the investment community. If you have any questions on any of these commodities, feel free to call us, BIS Commodities here in Cedar Rapids. Phone number is 800-373-2525 or biscommodities.com. We wish everyone a very safe and happy Memorial Day weekend.